A war thousands of kilometers away can suddenly affect the oil prices, inflation, currencies, and stock markets across the world. But the real story is not just the war itself. The real story is how that shock travels through global markets before eventually reaching countries like India. Because modern financial markets are deeply interconnected, when geopolitical conflicts happen in regions that control the energy supply and trade routes, the impact spreads across the global economy. In this video, we will break down the entire chain step by step, from the Middle East conflict to oil markets to global equities to currencies to supply chains. And finally, we will examine how all of this eventually influences the Indian economy and the Indian markets. Geopolitical conflict occurs frequently around the world, but conflicts in Middle East are different. This region controls a large portion of world's oil production and export routes. Energy is one of the most important inputs for the global economy. So when geopolitical tension rises in this region, financial markets start reacting very quickly because the first market to react is almost always energy. Oil is the backbone of global economic activity. Transportation, manufacturing, aviation, and logistics all depend very heavily on energy. When markets believe that supply may be disrupted, oil prices begin rising. Even the possibility of disruption can trigger the price volatility. Higher oil prices increase the production cost worldwide. This often leads to inflation pressure in many economies. Countries that import large amount of energy feel this pressure more strongly. But oil is only the beginning of this chain reaction. Markets in the Middle East react differently to geopolitical tensions. Countries such as Saudi Arabia, UAE, Qatar, and Kuwait are major oil exporters. Higher oil prices can benefit the energy producers in these countries. However, conflict can also create uncertainty for sectors like tourism, aviation, and real estate. Regional stock market therefore experience a mix of opportunity and risk. But the world's largest financial market reacts differently. The United States is the largest capital market in the world. US markets react to geopolitical conflicts through several channels: energy prices, inflation expectation, interest rate outlook, defense spending. Energy companies and defense contractors sometimes benefit from geopolitical tension. However, sectors dependent on consumer spending or transportation can face the pressure. But Europe faces a very different challenge. Europe is highly sensitive to energy price shock. Many European industries rely very heavily on imported energy. Higher oil and gas prices increase the manufacturing cost and reduce the profit margin. Industries such as chemicals, manufacturing, and transportation can face the pressure. European stock markets therefore tend to react strongly to the energy volatility. But Asia faces a very different kind of risk. Asia contains several of the world's largest energy importers. China, Japan, South Korea, and India all rely heavily on imported oil. When energy prices rise, the economic impact spreads across the region. Higher energy cost increases the inflation risk. Currencies may weaken because import bill increases. Equity markets sometimes become volatile as investors reassess the growth expectation. But the reaction is not only limited to the equity markets. During geopolitical conflicts, commodity markets often become very volatile. Oil prices may rise due to supply concerns. Gold often rises because investors view it as a safe asset. Natural gas markets may also react depending on the regional supply risk. Commodity traders therefore play a significant role during geopolitical events. But financial markets are also influenced by currency movements. Currency markets often react faster than the stock markets. When geopolitical risk increases, investors sometimes move money into safer currencies. The US dollar often strengthens during period of global uncertainty. Emerging market currencies may face the pressure if capital flows move towards safer assets. Currency volatility can therefore influence the global trade and inflation dynamics. But currencies are only one part of the global financial flows. International investors constantly allocate the capital across different regions. When geopolitical uncertainty rises, investors often adjust the risk exposure. Money may move towards safer assets such as government bonds or golds. Emerging markets sometimes experience temporary capital outflows during such periods. These movements can increase the volatility in the financial markets. But Geopolitical conflicts also affect something more fundamental. Modern economies depend on global supply chain. Shipping routes, logistics network, and maritime insurance all play important roles in the global trade. Conflicts in key region can increase the shipping cost or disrupt the trade routes. These disruptions may affect industries ranging from electronics to automobiles. Over time, these pressures can influence the inflation and economic growth. And this is where the impact finally reaches India. India is one of the largest energy importers in the world. Higher oil prices increases the country's import bill. This can create inflation pressure. Currency markets may react if the trade balance deteriorates. Interest rate decisions may become more cautious if the inflation rises. And stock markets may experience volatility as investors adjust the expectation. However, the overall impact depends heavily on how long the conflict lasts and how energy markets behave. Global financial markets operate as an interconnected system. Energy markets, commodities, currencies, and capital flows are all linked. When geopolitical shocks occur in critical regions, the effect can travel across the entire global financial system. Understanding these connections will help the investor interpret the market movements more clearly. So the next time geopolitical headlines appear, remember that behind the conflict there is also complex economic story shaping the financial markets. And if you want to understand how global events influence the markets and economies, subscribe to this channel because here we decode how the world moves the money.